What does this mean in terms of what the BOJ will do? Because we actually saw inflation easing in May, but it now seems to be picking up a little bit again for the month of June.
Yeah, it's a very good question there, Sherry. I mean, honestly, CPI, this number will only just add it into the mix of things that the BOJ is looking at. A single print does not make policy, as they say. So it's the trend that the BOJ are looking for, and something that it can leverage off, and whether this, this cost push will be sustainable. Earlier this week we heard Governor Kazuo Ueda. He said that the bank will essentially continue to ease policy, but he really did put a caveat there, though, that if their expectations, or if there's a shift in their expectations relative to the price target, then that could cause a change. So this print will certainly feed into that, and that comment that he made is certainly a sure sign that they're looking at it, and that's something that markets really need to be aware of. So naturally, 1 week dollar yen expected volatility, and now that's covering the BOJ meeting. That's jumped up. So you certainly have some traders that are seeing this meeting as live, but whether the BOJ makes a move or not, that's only Governor Kazuo Ueda knows that, and we'll find out next week.
Have we seen sort of the peak of the volatility when it comes to dollar yen? Is the dollar coming off perhaps its peak sufficient to give some breathing space for the yen now?
I mean, for the moment, there is a little bit of breathing space. Certainly, I mean, we haven't had any Japanese officials that have come out and jawboning it, for example, and saying they're watching one-sided moves. I mean, they're certainly going to be a little bit happier that at the moment that it's below 140 again. But realistically, though, you would expect dollar yen to be grinding higher at the moment, just purely on a trend as your friend basis. The recent dip that we've had, that has would have been a sigh of relief from Japanese officials. That dip that we had in dollar yen that hasn't broken the rising trend that has really been in place since the middle of January this year. Also, going on further, I mean, between now and the BOJ next week, we have the Federal Reserve, which is really the bigger player here at the moment. I mean, broadly speaking, there's currently a shift higher in global interest rate tide, and JGB yields really need to follow that. Overnight, we saw dollar yen go up to 140.50 just on the rise in treasury yields, for an example. So dollar yen really is a slave at the moment to that interest rate environment. If the JGB yields don't follow that, then those who bought that recent dip that we've just seen, they'll be rewarded for hanging on with new highs.